Hey everybody, we are heading into week 6 of the term. The L for this week is loans, but in particular, we're going to be looking at loans and different methods of financing. So let's get started. I've got kind of a bunch to introduce today, but I'm also going to draw a lot on online resources. So researching and preparing for this past week, it's one of those, reinventing the wheel. There are so many good resources from so many reputable places that I'm going to rely more on these this week, and not so much articles, but I found some really good videos. So with that, let's get going. All right, so really the way my brain sees it, we've got kind of three options. Also, I'm approaching this from the entrepreneurial perspective. So getting something started, whether that be something from scratch, or maybe something you're going to buy, or franchise or business opportunities. So I will also bring up in the research and the videos that I'll show you, also talk about growing your business. So one that already exists and has a track record of doing well. If you want to take it to the next level and get bigger and bigger and seek additional funding, which could lead to bigger things down the road. Uh, those resources will be hinted at in the videos that I'm going to show you. But really for this, we're talking about getting something started. All right. So again, like I said, in my mind, I see there are kind of three ways. You can do it alone, you can bring in partners, and you can borrow and pay back. And so just kind of this way we're going to play with and kind of look at the advantages and disadvantages. All right, so let's look at the trade-offs. And I think this is kind of the classic analysis when we're thinking about how do we bring in the resources? How do we expand and grow beyond maybe what we have available ourselves? So you can bring in partners in some way, or you can borrow. And those really have kind of opposite advantages and disadvantages. If the venture succeeds and you have brought in partners who are sharing ownership, then the rewards that you reap are going to be diluted. They're going to be shared among other people. However, if it fails with partners, with equity, then everybody's going to be out what they've invested. With debt, okay, so you borrow money to make this happen. Um, if it succeeds, then you pay back the debt and you still have all the ownership. But if it fails, got a video that I ran across with Mark Cuban. He said, with all the uncertainty that is involved in starting a business, the only certainty is debt and having to repay if it doesn't work out. So he cautions against it. But if you borrow money and your venture succeeds and you can pay it back, then you retain all the ownership of it. But if it fails, then you're still going to be liable for the amount that you borrowed, regardless of whether you have the income stream to to support it or not. All right, so we'll play with this as we go through these. All right, let's explore these ideas of doing it alone. And by this, I mean either self-funded or with this bootstrapping, the ideas that'll come up that we'll read about and see. It means with no resources from other places. So it's by yourself. So this is just kind of a list that I put together. Savings. So if you think about, you know, when you foresee buying a car, when you foresee maybe buying a house, that you have this kind of long-term goal and you know that a big expenditure is coming down the road. And so you start putting money away, start saving it, and have a good estimate of what it's going to cost, and then be able to uh, have money available when the time comes. So personal savings, this can be in all the lists that you see doing this research. And again, kind of one of the ones that's the most common sense. Personal assets. Now, again, this is from personal experience. So these might be things that you own, that you would be able to liquidate and then turn into cash that you can use for something else. So the idea that immediately popped in my head thinking through this is years ago, when my kids were little, I found a rent house close to campus and thought that would be a really good opportunity uh, to have for the long run. And so I spent an entire summer. Like I said, we got a good deal on it. We bought it from a family who had been in the house for 50 years. It was built right after World War II, and it was kind of a one owner house, but for 50 years. But it needs some updating, it needed a lot of updating. And so I spent an entire summer over there working on that place all by myself, kind of day after day, and finally got into a place where we could rent it and just had a really good good string of renters, and did that for about 8 years. And then in year 8, another opportunity came up, and I needed some cash. And fortunately, I also had a friend who was interested in buying the house. And so those two opportunities just kind of crossed each other, and I was able to sell the house, pull out the equity, and said over that time the property value had also increased, and so there was additional funds available, and so sold the house, took that equity, and put it into this new venture, and it all worked out great. So in other ways, it could be a lot of different personal assets, but that's just kind of the example that came to mind. Creative financing. So with this, a lot of those bootstrapping techniques, financing, measure cash flows, and how to combine things and creatively open up opportunities. The example for this, I'd already mentioned in an earlier lecture that we have a little place that we use for ourselves up in the mountains, use for ourselves, but then we also use Airbnb to be able to bring in some additional income as well. When that opportunity came available, it was one of those that was just too good to pass up. We'd been looking and looking and looking, but when it presented itself, we were ready to jump. We had some cash available, and we went to our bank and talked to our friend in the mortgage area who we dealt with before on a number of different opportunities that had come up, and he knew us and knew that we were the good, credit worthy people who were going to follow through on our obligations. We presented the idea to him. Actually, when we went in to see about refinancing our home, our primary residence, that the interest rates had fallen from when we had originally financed it. And so went to him actually to see about refinancing our house, but then also to present this new opportunity that had come up and see if we might be able to take out a loan on that. And so he kind of looked at our numbers and said, well, actually, because you've been in your primary residence for about 15 years at that time, you've paid it down enough and property values have gone up that there's enough equity in the house that we could just do one big loan and then pay off your old one, and you would have enough then to pay for the new opportunity in cash. And so that's what we did, and we did it with the help of our loan officer at the bank. So we refinanced our big house at a lower interest rate, and we had enough equity to then go purchase this other place in cash. And then we, in essence, paid for it with a higher monthly payment on our big house, but then we had this other place free and clear. Interesting. Okay, so that's the example that I wanted to bring up when I talk about creative financing and how to move things around and take advantage legally and the right way to do it, but to free up some cash through financing. Okay, bootstrapping. Now I'm providing it's almost a portal. It's a collection of articles and ideas by Entrepreneur Magazine. Bootstrap, pull yourself up by your bootstraps. You do it yourself. You work and you make it happen. So these bootstrapping techniques are ways that you invest, kind of like that rent house. You invest the equity, the sweat equity. You do the things yourself. Keep your costs low. Be very frugal with what you spend on, and then from that to make this thing happen on your own. So I'm going to, like I said, in the resources for this week, take a look at that. Jump into that portal and take a look. I think you'll be inspired. And then this last one on this list, I talk about buy yourself, but with others. And actually, we're going to come back to this kind of at the end when we talk about crowdsourcing. We're going to have others help us, but they're not necessarily doing it for ownership or for repayment. So the Small Business Administration, I had you make contact with your closest SBDC in one of the opening weeks of the term. I wanted you to kind of know that they existed, know what their phone number is, and how to get in touch with them. But some of the small business development centers around the country are going to have incubators, so small business incubators. I was familiar with one years ago in Waco, and then also Abilene had one for a long time as well. But an incubator, think about the idea of what that word means. If you think about incubators with birds, you put it into an environment where the egg can hatch, and then the environment is right for the new little bird to grow and develop and to become self-sufficient. So the SBA, and a lot of times connected to small business development centers, will have incubators. And what I found is that across different cities, that some of them may have different things that they emphasize, maybe technology, maybe manufacturing, maybe services, but you bring all these kind of like-minded brand new entrepreneurs together and you provide counseling and you provide resources, you provide maybe office space or manufacturing space, and then also shared services. So you might have some shared administrative support, maybe a common phone number with someone who is there to answer it, maybe office supplies and copy machines and other things that are needed. But so this is what I call in the do it alone. So your own personal savings, personal assets that you might be able to liquidate, creative financing of things that are already kind of going on in your life, bootstrapping, so these different techniques of freeing up cash and also working hard on your own and being frugal and really kind of zeroing in on what is needed and maybe not necessarily those wants and luxuries. And then also with the Small Business Administration, the SBA, and particularly incubators. This next one, okay, so just kind of thinking through this, there's so much in this, and there's so many different options and opportunities that this is how I'm going to present it with this, and again, provide other resources. So in some way, you bring in other people. All right, so when we talked about legal form way back at the beginning, we talked about partnerships and why you would want to bring in a partner. And a lot of that had to do with complementary skills and abilities, access to resources, access to networks, but it also had to do with resources that maybe some people are looking to be involved, maybe in a limited way. So they would invest and then let the general partners make the decisions. But with that, even though they're not necessarily involved in the day-to-day running, through the partnership agreement, there's going to be some type of ownership, some type of equity, more than likely. Okay, corporate forms. And so I included this. When we're talking about corporate forms, we talk about shareholders in some way. And so we had the S Corp and the C Corp, even the LLC with the managing members. It's equity that's going to be shared out among other people. Maybe not the ones running the company, but they have invested and they claim ownership in some way. So those two, so it goes right back, both of those go back to legal forms as well. Now, as you start to grow and gain some traction, this is where angel investors, and venture capital firms, venture capitalists come in. And again, some great videos that I'm going to provide. These are the ones when I watch them and study and read them, these are the ones that are really involved with taking you to the next level. So as already mentioned, the focus for this presentation right now is how to get started. And then the angels and venture capitalists, those would be the ones to take you potentially to the big leagues. And then I also included this one, strategic partnerships. So this might be joint ventures, strategic alliances. It may be that you propose doing something, but you don't have the resources, but someone down the road is doing something very similar, and maybe you could offer joint programs through them. So again, just things to think about as we ponder how to get started and get up and running. All right, the third one of these options, at least from my mind, is that idea of borrow and pay it back. So this is some type of loan, some type of debt. So the advantage of debt with productive opportunities is that idea of leverage. So, you know, if you're going to buy a rent house, you wouldn't have to pay the whole amount. You could just pay the amount required by the bank for a commercial loan. So the ones that I've run across have been 20%. So with 20% down payment, then you're able to purchase the entire thing and then collect the revenue stream based on the whole amount, rather than just something that would be smaller that you could afford at full price at 20%. So again, the idea of leverage, it needs to be managed properly. Okay, debt can be a very useful tool for companies and for individuals seeking productive opportunities because of the idea of leverage and the return on investment. So looking at these different types of loans, the family loans, again, one of those things that appears on every one of these lists about starting a business, but on every one of those lists, it cautions about what happens if it goes bad and what might that do to relationships within the family. So just again, we're really with all these, but particularly with this one, some to be very careful about. So family loans, but maybe the situation would present itself and that would be a really good option. Every situation is going to be a little bit different. SBA loans. So the Small Business Administration, again, here it is again. SBA has loan programs for entrepreneurs who are starting businesses. Now, just kind of like guaranteed student loans, with student loans to go through college, and in order to receive these, you have to qualify for them. And so you go work with your counselor, you go through all the necessary steps, and you apply. The Small Business Administration will have a network of lenders, again, kind of like the student loan uh, process. And then those lenders, knowing that you have gone through this process, will have a little more assurance that your idea is sound. But then also there's some assurance back from the government to the lenders to help in case it doesn't work out. So neat thing about the SBA is there are loan programs available for different groups of people who are maybe not traditionally represented in the business world and in the entrepreneurial world. So check it out. Uh, I know that there are loan programs for businesses that are started and run by women and minority-owned businesses. Check those out. Okay, bank loans. Okay, so I've already kind of told the story about going to my bank to help us with property that we could then use for ourselves, but also to rent out as well, and for rent houses as well. But bank loans. So to establish a relationship with a banker, that they know you, that you have collateral, that there's a track record, and that they know that you are a good, honorable person. And if it doesn't work out, that you will repay it. And like I said, maybe there'll be collateral that would be up against that. Uh, but bank loans, and kind of as we look at the articles and the advice behind this, they said some of these bank loans are going to be hard for startups, that maybe bank loans are going to be more to help you grow and to build. Again, let's look at the extra resources on this, and then all the situations will be different. Let you go and talk to your own banker about it. And actually, that's going to be the assignment for the Sunday reflection. And then I included bonds as well. And bonds are, traditionally known as a way that companies raise money through debt, that they float bonds and they repay them. But kind of as already mentioned, for this presentation, we're looking particularly at kind of smaller businesses getting started, and not the big ones that are seeking to expand. All right, and then this last one, just to bring up, this is something new. This is kind of crazy, but this is something that's come about in the last decade or so. It's the idea of crowdsourcing. And so you can, through social media and other sites, you can find people willing to contribute to your venture. And most of the time, these are going to be small contributions, and the people who donate are not going to require any type of equity stake. But then, doing the research on this, found that there are some that would provide equity, or that the contributors would expect some type of equity. It seems really complicated, but again, this is a new world. So social media, Patreon is one of those that we've run across with YouTube channels. And so these people are making YouTube content, doing very interesting things, and they bring in members through these Patreon accounts, and then they provide benefits to the members. New content, content that's released early, other types of member benefits available to those people who kind of subscribe and become part of that community. So neat thing. So that's doing it alone with others coming in who don't necessarily require an equity stake. So that's all I've got for this presentation, a little shorter than the other ones, but the resources, the videos and things, really take a look at those. And with this previous stuff, you'll see that there's a lot of overlap, but each one that I introduce brings in some unique stuff to it as well. So invest some time on that. And then the review questions, the discussion questions for the week are going to have you analyze these different ideas and link them back to your proposed business idea. So that's it. We'll call it on this one. Thanks. Bye.